Hi guys, and welcome back to the channel. In today's video we're talking about how you can beat inflation. How can you beat inflation? Let's have a look in this video. 5 ways and strategies, things to think about to help you beat inflation. So keep watching. The more you learn, the more you earn. The more you know, the more you can grow. And if you're looking for your capital to do well and grow, then the more you know, the more you grow. So 5 things to consider. Let's get started. Number 1, assets and companies that have pricing power. Now I'm going to do a separate video on the importance of pricing power and what it actually means. But essentially it's the ability for companies, assets, whatever it is, to raise prices. And there's a lot of different components to like raising prices, how someone can do it, why they can do it, when they can, when they can't, how often they can and they can't. It's kind of almost economic theory, but in principle, typically, it's the kind of better companies or assets that can raise prices. We're going to talk a little bit more about it with the other tips as well. So number 2, companies or assets that have what's known as a moat. A moat is when they are so kind of different or difficult to copy that they can build in increased demand into their products or services. This normally correlates to higher pricing. For example, if you think of something where a company invests a lot in R&D, they build better products. You can think of like the Teslas or the Apples of this world. Because they've got that better and superior products, they've created almost a moat around them. I'm sure they've got legal protection as well in terms of their IP and their designs and things like that. That generally, that moat should mean that they can have that pricing power and they can beat inflation. They can increase prices, which means they're not really going to be at risk of losing value with inflation, and the stocks and the price around those stocks should be resilient. So similar but not quite the same as a moat, companies or assets can be special or unique, can often charge a premium. You can imagine something like a rare item, like a rare piece of art or a rare book or rare collectible. Often these things do appreciate in inflationary markets. Now, I wouldn't normally advocate individuals investing a lot in art or collectibles, and I'm not doing so in this video, but typically, if it's something that has an asset that has inbuilt demand and is rare, when there's an inflationary environment, things like those types of asset classes can do well. When we think of companies and more standardized investments, we can think about the companies that are creating special or unique type products. Maybe they have legal IP or a design factor that is completely different from their competitors. Now, I invest in some retail trading firms, for example, in the consumer space and in food and restaurants and leisure. And in that space, it's unique or sophisticated types of recipe that aren't immediately available to competitors. Or it might be the feel and the customer experience. An example of that is the Everyman cinema chain in the UK. It's a luxury cinema chain. They're not competing like for like with the big cinema chains, which, to be honest, they're no different from one another. They're almost a commodity product or service. You don't want to be going down the commodity route or the commoditized service. You want to go for unique or special, and within the cinema or leisure industry, that's that luxury feel. You know, you get an armchair, you can eat and drink, you might get service straight to your table. The tickets, I think, are about, I don't know, £20, sometimes double or triple or quadruple the price of normal cinemas, and that's just one example. So the third thing about how you can beat inflation, or things to consider for assets and companies that do beat inflation, is to go with a company or asset class that has a limited supply. Now, a lot of people in the cryptocurrency markets spout this as the most important factor in a lot of cryptocurrencies, i.e. normal currencies or fiat currencies have unlimited or growing supply, whereas cryptocurrencies are limited by a limited number that can be manufactured. The same is true of stocks and companies as well. There are companies out there that limit supply. I had an interview, I didn't actually get the job, but I had an interview with Rolex. They purposely limit the amount of supply of Rolex watches because they want to ensure the luxury element and they want to keep that pricing power. So you want to just remember that it's not just about the low supply or constricted supply. You want to also make sure that there's inbuilt demand and hopefully growing demand for that particular product, service or asset. Number 4, the fourth thing to consider when looking to beat inflation this year and in future years is to think about assets or companies that have consistent cash flows that go up year on year. Certain company formats, certain industries, certain products are kind of inherent within them is an ability to raise prices. For example, in the franchise markets, if you have a successful franchise, you can normally increase the cost that you charge to franchisees every year. Or if your technology is improving year on year, you may be able to charge more for new models or updated software or updated products and services. And the 5th way or thing to consider when you want to beat inflation is to consider assets or companies or products and services, things to invest in that have intrinsic appeal, meaning that there is a chance or a higher probability that the value, the capital value of the particular asset, company, cryptocurrency, whatever it is going to increase in value. This is a really good way of mitigating against inflation. You know, we thought about all those 4 other things, you know, high demand, low supply, unique or rare, companies that have pricing power and rising cash flows. And all of those things should contribute to an increasing capital value of that product, service, business, asset, whatever it might be. However, there are other things and other factors that increase an asset's value. For example, the glamour, the hype, the interest, whether there's a trend growing, whether there's marketing value going in, for example, YouTubers talking about it or the press are talking about it. That's one thing to consider. Their pricing power, you know, they're able to increase prices and there's increasing demand for their services. If they have all those factors, it's likely they're going to be an attractive company and there should be less risk in buying that. Now, I'm not a financial advisor, so this isn't advice, just my opinion. But I think those are the 5 key things. Well done if you've got this far. Remember that the more you learn, typically the more you earn, and the more you know, the more you can grow. I strongly believe in professional and personal development. This is really what this channel is all about. So if you like this video, make sure to like it. And if you know anyone that would benefit from watching these videos, learning more about, you know, things around investment, personal development, getting a better job, etc., then make sure to share these videos with them. If you've got any videos in particular or any comments about this video or any other videos, make sure to leave comments in the comment section below and I'll be sure to follow up. Knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next video.